Hello, welcome to chapter 11, where we are going to get onto the homework. Yay. All right, chapter 11, we're dealing with current liabilities for the most part. So let's see what our first one is. Looks like we have, or we purchased equipment costing $20,000 by issuing a 1-year 6% note payable. Sorry, I get my chair situated here. All right, so we're going to get equipment as a debit, notes payable for 20,000. We didn't buy it with cash. We did it with exchange for the 1-year note. Okay, good. Next aspect, we're accruing December 31st. It was a 1-year note at 6%. And so 20,000 times 6%. So our interest is 1,200. Okay, that's easy enough. That's $100 a month. We did this transaction on July 1st. So July, August, September, October, November, December, that's 6 months. So we're paying $600 of interest. So we're debiting interest expense, crediting interest payable. Accrued interest expense at your end is our description. And then, of course, we're going to pay the note plus the interest at maturity. So note payable was, I already forgot, was it 10 or 20,000? I think it's 20,000. Yeah, 20,000. Interest payable, we recorded 600 of interest expense from the prior accounting period. So we owed it. We're going to put that and reduce that owe because we're paying it now. We're expensing an additional 600 because it's been another 6 months. And then we're going to credit 21,000. I had to think about that. 21,200. I think I had to say that. 21,200. And we're going to pay note at interest and interest at maturity. Good job. You did awesome. Next thing we got is a short-term note payable and salaries payable. This will be fun. Journalize the payoff of the short-term notes payable from 2024. Well, let's look and see what we got here. From 2024, we had a short-term note payable of 15,100. There's no interest on short-term notes payable. Yes, there is. There's always interest. Even if it's a no interest, we have to record that there's interest. But that's an advanced accounting concept. I won't teach that to you right now. I don't want you to get confused. We're debiting that. We're debiting the short-term notes payable and crediting cash, and it's to record the payment of the 2024 note. Journalize the payment of the salaries payable from 2024. Salaries payable from 2024 was 3,600. So that's what we owed. We accrued it then. Now we're paying it. So we're going to debit that salaries payable, credit that cash. And I should do better about remembering the number because talking and remembering numbers is not my strong suit. To record payment for salaries payable. Excellent. Journalize the borrowing of the 2025 short-term notes payable, 16,700. Let's just put that in there first, shall we? So we're going to debit cash because we're borrowing the money, and we're going to credit notes payable. There is short-term notes payable. To record cash borrowed on notes payable. And then what do we expense? But 3,500 for our salaries payable. Salaries expense, salaries payable. Dang, it did it again. What was it? 3,500. To record accrued salaries. Yay, next question. That was fun. Okay, gross pay. This is really the meat and potatoes of this chapter. We're going to calculate the straight time, as the book likes to call it, as well as the overtime. I am going to pull, I have my calculator. I'm going to pull it off screen so that I can do this and not lose it every time. So earnings up to date are 12,000. Then we have this week of pay. $16 an hour times $40 or 40 hours. Gross pay or straight time is 640. 19 hours of overtime. Overtime is 16 times 1.5 because it's time and a half. So $24 times 19, 456. So if we add this up, that's going to be 1096, 1096. Now we're going to calculate net pay. Well, gross pay, we're just pulling this down from what we calculated. Total withholdings. Let's start off with our, gosh, I just learned that acronym when I recorded this video for this chapter. Old age something and disability insurance. Yes, what was that S for? I forget. I don't care. It's Social Security to me. I don't care what it is. Social Security, 6.2% of gross. So I'm going to take 1096 times 0.062. So the word around all amounts to the nearest cent. So the nearest cent for me, I got 67.952. So I'm going to stay at 0.95. Then I'm going to calculate Medicare, which is 1,096 times 0.0145. And I get $15.89 because I'm rounding it to 89. It was 15.892. And this one is for Medicare. Then it says payroll deductions include income tax of 30%. So employee income tax, I'm going to take 1096 times 0.3 because it's 30% of it, which is bullcrap if that's what you're making. Let me tell you, 328 what I got. Let me tell you this really quick. If this is weekly pay, even with the overtime, we got 1096. I'm multiplying that by 52 weeks. That's 6,992. There's no way in blank the tax rate of that individual is going to be 30%. It's going to be somewhere more around 10%, maybe 15. The effective tax rate will be somewhere between 12 and 13. No way. That's way too much tax. Unless that person wants to get a fat check at tax season, which I don't recommend, but that's whatever. Oh, and then the charitable United Way, $11. Okay, that's ridiculous. Sorry, I look at the practicality. I get why in academics we want to show the amounts, but it's not. It's just not real. Okay, so this is what I get when I add up all these numbers together. It should be more around like $20. I'm yeah, $20. 20% of that would be 200, I guess, actually. So it's more like 10%. So you'd be looking around maybe $100. At any rate, let's go ahead and find out what our net pay is. I'm taking the 1,096, subtracting the 423.64, and getting 672.36 as our take-home pay. Then we're going to journalize the wage expense accrual for the work here. So our debit is going to be to where is it? Wage expense. So apparently we're gonna do wage expense for 5. So 1, 2, 3, 4. We're gonna do wages payable, and the amount for wages payable is the take-home pay. So I'm just doing what I know already, and I know my wage expense is gonna be the gross. Okay. Everything else is gonna be these numbers here. So we're gonna do the FICA payable, both of them for Medicare and Social Security. We're going to do the employee tax payable and the United Way payable. I remember that one. That was a whopping $11. I shouldn't disparage. At least they're doing something, right? 67.95. I don't care. People can do whatever they want. 1589, 328, 80. I don't mean to rip on people's whatever. I'm just looking at that from take-home pay, $11. They're not making that much anyway, but that's like 1.5% of their pay. Good on them, I guess. Journalize the subsequent payment of wages. I just feel like give back. That's why I teach. That's why I do a lot of the things I do. It's because I want to give back. But you got to be in a position to be able to do that, and that's true. This person's making 56,000. That's not in a very good position to be paying a lot. So at least they're doing something. Their heart's in the right spot. All right, we're gonna record paying all of this. Wages. All right, or no, I'm sorry, just the wages. So just this. Okay, so we're going to debit the 672.36. So debiting wages payable and crediting cash. Don't need to explain it. Good. It's fun. What are we doing here? Another one. You know what? Let me see if this is. Oh, this is the restaurant. This is the company. So we'll do this one too. I thought if it was just a repeat of the other one, we wouldn't do it, but we'll do it. All right. So let's just look at this. Journalize Vista Bonita Mexican restaurants expenses for employee benefits and for payroll tax. So I know tax. Let's do. I guess we should look at this before I just jump into it. 23,000 is subject to the unemployment tax, following benefits, health insurance, life insurance, and retirement. Begin with the entry to record employer payroll tax. Okay, that's what I was looking for. So we're just focusing right now on the employer payroll tax. Payroll tax expense. So we're going to be doing the company share of Social Security, Medicare, and then our federal unemployment taxes and our state unemployment taxes. Social Security, under better circumstances, we would be having that already calculated. Incurred salaries expense of 66,000. So 66,000. Or multiply that by 0.062 for Social Security. So this one is going to be $4,092. 66,000 times 0.0145 for the Medicare rate is 957. Then it says, remember we have a 7,000, the first 7,000 of employee payroll is subject to the unemployment tax. So 23,000 is subject to those taxes. So 23,000 times, let's find out what those rates are for federal first. Buddha is 0.6%. So we're gonna multiply it by 0.006. So I got $138 for the federal portion. Can't even talk right now. And then the state portion is going to be 0.00 or 0.054. 1,242. So for the payroll tax portion, we're going to add up all of these. And I got 1,429 is what the employer has to pay. Now record the accrual of the employee benefits. So we're going to do employee benefits expense now. And it said they give health insurance. And then retirement. Wait, life insurance? Was that one? Yeah, life insurance and then retirement. And then it said the cost to the company for the health was 2,600. Cost to the life insurance was 420. Cost to the company is 6% of salaries expense, 66,000. So 66,000 times 0.06 is 3,960. Adding all of these up, 3,960 plus 420 plus 2,600. I got 6,980 for employee benefits. What was Vista Bonita Mexican Restaurant's total expenses for 2025 related to payroll? If this is all of 2025, then it is. Wow. So let's do employee benefits, payroll. Six four two nine. Employee benefits were 6980. So salaries expense would be one for 66,000. I don't think we're picking anything out of here. We already did this federal income tax. I agree that that should be one, but I don't see it up there unless it's in this. Let's look in here. Yeah, here's the security cap. I was complaining about that, I think, in the lecture video. Retirement benefits. I don't see interest or income tax. There was nothing withheld for income tax for, oh, well, it wouldn't be a expense for us anyway, but we would have income tax unless we're a sole proprietor, I guess. Maybe that's why it's not there. All right. So we don't have federal, we're not gonna have state, and we did all the other three, so let's leave it blank. Just making sure. So let's calculate this 6980 plus C429 plus 56,000. I may actually be wrong that 66. No, I'm not. I'm correct on that. Because that was what we did. Yeah. Yeah, yes. All right. Last question. Here it is. We are doing warranty. Better be doing warranties. That's what I put here. Yeah, here it is. Warranty expenses 6% of sales. Made 60,000 sales. Report only the warranty expense. So we're going to debit our warranty expense. We're going to credit our warranty payable. Or sorry, estimated warranty payable. 6% of 16,000. I'm noticing that they are fixated on that 6%. Seeing a lot of their problems. Then we paid 500 to satisfy warranty claims. So we're going to do debit to estimated warranty payable. And we paid this, so it's coming out of cash for 500. Estimated vacation benefit. Oh, this is like a whole big old. That's a estimated vacation benefits expects to be 1,700. So vacation benefits, it's vacation benefits payable 1,700. This is an estimate. We don't really know what's going to happen. Then clearly expected to pay employees a 3% bonus on net income after deducting both. All right, I really hate these ones. Okay, and I got to remember. So it 30,000. I think it's 30,000 times that 3%. So I get $900 divided by 1 plus 0.03, the bonus. So I'm getting 873 round to the whole dollar. So I'm getting 874. So we're gonna do bonus. Let's find out what bonus things they get. Employee bonus expense, employee bonus payable. Again, I'm doing this off of memory, so I got it right, but just write down that formula like I told you to. Just want you to do this. Anyway, so that's chapter 11 work. Let me know if you guys have any questions. Peace.